It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks advancing for a third session with the prospect of Fed rate cuts on the horizon, stoking sentiment. The yen, though, at a 3-week high. That's hurting Japanese exporters. Investors also watching Middle East tensions after Israel launches what it calls a preemptive strike on Hezbollah in southern Lebanon. Plus, we get the outlook for India's generative AI sector, speaking exclusively with the co-founder of one of the country's biggest startups. For now, though, let's take a look at how markets tracking this Monday in the Asia-Pacific. Avril Hong's in Singapore. Avril.
Yeah, Paul, we're seeing a mixed picture emerging despite some of these earlier gains in stocks, in bonds, in FX. And this is thanks to markets gaining confidence about Fed rate cuts to come on the back of what Powell had to say at Jackson Hole. We're seeing, as you mentioned a short while ago, Japanese equities underperforming, no thanks to the stronger yen. But overall, you get the sense that the undercurrent is one of market confidence towards Fed rate cuts. Now, in terms of equities, a couple of risks we're watching in terms of the Middle East tensions after Israel struck Lebanon over the weekend. We're seeing oil prices taking higher, but also don't forget we have those Nvidia earnings later in the week. You wonder what's that going to mean for some of the South Korean chip makers along with the ones in Taiwan. Flip the board and take a look as well at what we're seeing in the US Treasuries, because after Friday's comments from Powell, we did see that rally in Treasuries, particularly on the shorter end of things. Today, we're still seeing the 2-year. Those are the ones that are leading the gains. And of course, we also had some comments from Powell. I'm sure you guys have heard it, but in case you missed it, have a listen.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Well, our next guest believes the Fed won't cut rates in September and only expects easing after the US election. Let's get over to Andrew Ferris now, CEO of ECognosis Advisory, global financial and economics consultancy. Well, Andrew, you heard the words from the man himself there, Jay Powell. The time has come. You think maybe it hasn't. Why?
Well, we have heard that so many times, so it is perfectly all right. You know, he has every right to look at the numbers. I look at the numbers as well, and I'm afraid I'm not getting at all the idea that inflation has stabilized. Practically every single number that the Fed is looking, including the PCE as well as the CPI, is on about 2.5% plus. So in other words, if the target is 2, I'm sorry, you're not anywhere near hitting it. It's not a matter of waiting till inflation is 2. It is a matter of waiting till the trend is absolutely certain, and I'm afraid I don't see that. Hence, I stick my neck out, and I'll say between now and September, things may very well not confirm that this is what's going to happen. Plus the fact, of course, poor Powell cannot come out and say, look, I'm going to cut in September. He'll say, if the data are there pushing towards that, then we will. Yeah, he has been saying that for 2 years. There is no reason, in fact, why he should have possibly changed. And of course, the labor market gave us a colossal shock only about a week ago when there was an overestimate of 800,000 jobs. How can I possibly rely on those numbers and tell you that everything is fine? Of course, he's relying it because the numbers are pointing to a weak labor market and therefore just justifies a cut. You know, I'm not being clever, I'm simply being factual. Okay, there is not one item of my forecasting. It's simply I look at the numbers and I'll say, do we look at the same numbers? And apparently, yes.
Yeah, well, everybody's got the same numbers in front of them, and there is a rich divergence of views, as you say. I mean, Bloomberg Economics has got a baseline now for 50 basis points in September, but in your view, would a cut of that magnitude suggest something else? Panic, maybe?
I was going to tell you, God help us if Powell cuts by 50 basis points, we're going to have another Monday the 5th. In other words, the markets will say, look, it is much worse than we thought, because here is a guy that has been very reluctant to cut by 25 basis points, and he cuts by 50. I cannot be more bearish on the equity market short term if I go out and I forecast a 50 basis points cut. It's not going to boost the markets. On the contrary, the markets, whatever it is, the people in the markets have shown to us that it only requires quite a stupid thing like the carry trade with the yen, coming off, despite the fact that we knew that interest rates in Japan were going up since March. Why they waited till August to sell it off? And then, of course, immediately, 2 days afterwards, everything is back to normal. Yeah, thank you.
Andrew, why do you think Powell is sounding dovish then? I mean, if, to your point, this would actually come at the risk of confusing the markets, why would he risk doing something like that?
Well, because they have made the mistake before. He's under enormous pressure to get it right. One candidate for the presidential post said that he's going to fire him. Well, he's going to let him if he does a proper job, namely he doesn't cut interest rates before the election. But after that, his job is up for grabs, presumably. I am sure, not for one moment, that he gets up in the morning and he says, I better please Trump. But I am sure this is something that the Fed will be having before that. And incidentally, the Fed has a very good record of not cutting or increasing interest rates before elections.
Okay,
so, yeah,
what is that going to mean?
He looks at the same... Yeah, sorry.
What is that going to mean for other central banks then, Andrew, if the Fed, to your view, is going to be a bit more cautious? Where does this leave the likes of the ECB?
Well, let's look never mind what I think, let's look what the central banks are doing. And the implication of what Powell might be doing, I'm going to do a Robert De Niro for you, watch my eyes, it's going to be zero. Look, the People's Bank of China, it is cutting interest rates completely unrelated to what happens in the States. The Bank of Japan has even hinted it might increase interest rates if inflation continues to accelerate. And the European Central Bank is effectively sitting on its hands and saying if inflation continues to fall, then we will take action. So in other words, the other three major central banks are not looking at the Fed for guidance. They've got their own problems.
Well, I think the main disagreement here seems to be over timing. The general trend, as you say, is the same. The Fed is likely to move to ease. The BOJ is likely to move to tighten. And with that in mind, can we just take a look at the yen for a moment? It has strengthened impressively over the past few weeks. Where do you have it by year end?
Let's take two items here. If the Fed cuts in September, the yen will continue to appreciate because the differentials are now widening in favor of the yen. In other words, they are narrowing against the US dollar. If the Bank of Japan, and we're going to have some numbers coming soon, clears its throat and says, well, perhaps inflation is not going the way we want it, so we're going to wait. In other words, they are not cutting interest rates, the yen will continue to appreciate. So if you want an overall trend, it looks to me that the yen is not going to weaken.
How are you allocating then, Andrew?
I'm allocating, right now I'm telling my clients, keep away from equities and bonds, because too much is at stake in terms of pure expectations and not in terms of numbers. All right. In other words, if September comes and the Fed doesn't cut, again, God help us. All right, it's going to be, we're going to be again all over at the same thing that we have been doing in the last 2 years. Remember, each time the Fed took or didn't take action, the markets tanked, or the markets got jumpy and unappreciative and uncertain. So I think it will be very unwise of me to tell my clients, perfectly equities and bonds are going to benefit. Bonds because the prices are going to go up is if interest rates are going down, and of course the same thing with equities. No. Keep clear of that, I keep saying it is pathetic to say it, but I think it is very wise. I much prefer, to be late and correct than early and wrong.
Andrew, what do you make of the idea that, the yuan carry trade still looks attractive, even as we see this unwind and rethink of the yen carry trade?
the yen carry trade. Well, first, let me tell you what the markets think of the yen carry trade. And apparently, back in August the 5th, Monday, okay, the markets, thanks to the unwinding of the famous yen carry trade, were back in 1987. Look, I'm old enough to remember 87 very, very clearly. And the markets fell even below what happened in 87. And 87 was absolutely grim. And then, of course, 3 or 4 days later, we started going back to normal. Well, but the yen continues, in a sense, okay, to be more expensive, as if interest rates will be if interest rates will be coming down, expensive in terms of the US dollar, and apparently that was that. So if you're asking me what I think of the yen carry trade, I will quote you what Mahatma Gandhi was said if he was questioned what he thought of Western civilization, and he said it will be a very good idea.
All right, Andrew Ferrer, CEO of ECognosis Advisory, is sticking around. We'll get some more views from Andrew in just a moment. All right, stay with us. This is Bloomberg.
It is incumbent on all parties in the region to work towards de-escalation and stability. And so we are feverishly working in Cairo as we speak with our team and the teams of the other mediators, as well as with the Israelis, to get to a ceasefire and hostage deal.
That's U.S. National Security Advisor Jake Sullivan speaking with reporters after Israel's bombing raids on southern Lebanon on Sunday. Israel says it took out thousands of Hezbollah missile launches based on intelligence that the Lebanon-based militant group was planning imminent attacks. Let's take a look at how oil is moving in the wake of that. Higher is the short answer. We've got Brent right now, 79.51 a barrel. We saw some big moves higher after those developments. We've got WTI, meanwhile, higher also, 75.33 for a barrel of New York crude. All right, let's bring in our news desk editor, Jill Desis in Hong Kong. So, Jill, what's the latest on ceasefire talks? It's not looking too promising at the moment.
Well, Paul, no, it's not looking particularly promising, but I think it is noteworthy that talks on ceasefires are still continuing. So delegations were actually just in Cairo and leaving there. Kind of depends on who you ask. Each side, as to how successful those talks were. I'll just read you off a bit of a statement from the Hamas spokesman saying that, they're saying Israel has set new conditions for a ceasefire. They're still procrastinating. Kind of took a dig at the Biden administration, saying that they're planting false hope by talking about an imminent agreement for electoral purposes. Now, on the U.S. side, the Associated Press had just talked to a U.S. official saying that recent talks have actually been constructive. Parties are working toward an agreement. We'll have to see what ultimately happens there, but at the very least, talks are expected to continue within at lower levels within the coming days. So there is still that continuation. I will just point out, Paul, that despite the fact that we did have these strikes happening over the weekend, those ongoing ceasefire negotiations still did continue in Cairo. So there is that continued open line of channels of communication. So we'll see how much that actually progresses into something more. But at the very least, it does seem like, we've avoided any kind of massive escalation thus far.
Is there, further concern of the potential for escalation beyond this point? It is heartening that these ceasefire talks are still continuing, as you say, Jill.
Yeah, Averill. So at this point, there's actually, some analysis to believe here that, this preemptive strike by Israel maybe headed off the idea that there could be some kind of big blow up. So what Israel was saying is that, they launched what they called this preemptive strike because they had received intelligence that Hezbollah was planning on launching potentially thousands of missiles targeting, specific areas around northern Israel. There was retaliation, on the back of this after, Israel launched this, again, what they called this preemptive strike, involving on the Hezbollah side, somewhere in the neighborhood of a couple hundred projectiles. But at this point, casualties have actually been fairly limited. There's been, it hasn't been zero, but it has been fairly limited, in the grand scheme of things. So it's potentially the case that we could see some additional action here. But yes, ultimately, there's this pervasive sense that maybe it's going to be somewhat calmer. Again, as we were just discussing, there's going to be these continued lower-level ceasefire talks that are continuing. But I think, obviously that still is kind of leaving the region on edge for any kind of massive, escalation in the future. But at this point, again, sort of this feeling that maybe things are going to be a little calm for now. But as I just said, no reason to think that everything is entirely over at this point.
All right, News Desk Editor Jill Desis there. Well, Andrew Farris, CEO of ECognosis Advisory, is still with us. And Andrew, we were talking a moment ago about the risks around central bank policy. Well, I offer you the risks of the conflict in the Middle East, always unpredictable, as we've just seen. How are you trading around this risk?
I have to be very careful here, because if you're saying trading around this risk, the risk is that if things deteriorate, potentially the markets will be looking, for example, at energy costs. Now, if you're telling me how do I trade around this, I'm afraid it's a very cruel but a very correct so far policy, and that is to buy defense stocks. And the worse the risks become, the better the defense stocks appreciate. It might sound amoral, it might sound perhaps a little bit insensitive, but that's the way it is. In a period in which there is active war going on, and it is not getting any better, defense companies are doing incredibly well. And they have been doing so since January 22, when the war with Ukraine took off.
Okay, so how do you hedge at the moment? If your defence stocks are logical, if you say perhaps a moral buy, but do you look at other options as well, perhaps treasuries or gold?
I'm afraid in cases of both Bitcoin and gold, their performance has proved that they are not necessarily good hedges when there is risk uncertainty. I tend to think that the best way I can tell my clients is, for the time being, is how not to lose money as opposed to how to make. For making money, defense stocks. For not losing money is keep away from US equities and bonds for at least another 2 to 3 months, even if the Fed cuts in September. I would like to see what will be the reaction of the markets when and if that decline comes. And given that I feel uncertain about the way the Fed has been forecasting or has been trending with inflation, I think it will be unwise. So let's say what I bring on the table is a policy to avoid losses by simply jumping on the idea that if the Fed cuts, this is bullish for equities, which I don't think it will be. And at the same time, if you want to make some money, stick with defense.
Andrew, aside from defense, do you see a way to hedge around the US election risk?
Yeah, that is another, God, you make me really sound as if I'm an economist, and that's a dreadful thing to do. Because in the case of the election risk, I will tell you on the one hand, but then on the other. I spend quite a lot of time writing to my clients what will be a buy if at the same time, at that time, Biden wins or now Harris wins or Trump wins. And of course, they are very different, they are quite different, let's say, possibilities. And of course, to make any sense about that, then I will have to give you a probability. And right now, it looks as if the Democrats may win, but it's no good telling you there is a 55% that Harris is going to win as opposed to a 45% of Trump winning, and therefore go for it. Very, very awkward. The only thing that I will tell you directly for Trump, it will be very, very good on anything that doesn't have to do with climate. Okay, and therefore it will be very good for fossil fuels if Trump was to win.
What about for Asia, Paul? I mean, presumably we could see further protectionist measures. Maybe that could be aligned more if we see a possible Trump presidency. But what are you looking at in terms of this part of the world?
Absolutely. Now, the big, huge market is China, followed by Hong Kong. Now, Hong Kong, if the Fed cuts, that's going to be good news for Hong Kong. All right, because with a peg, this means that Hong Kong interest rates will now be on an actual trend to go down, and that will be good for the property sector that has been hit very, very hard. As far as China is concerned, okay, cutting American interest rates is of no consequence whatsoever because the Chinese economy is driven primarily by purely domestic issues. And here we have had benign monetary policy, okay, with interest rates coming down and greater efforts to pump money directly, potentially, into the property sector. And unfortunately, this is going to take quite a while. All right, so it's no good saying if something happens, then this is what I will be buying in China. I will be buying something in China. I'm cautiously neutral on China right now because the policies are in the right direction, but we have to see how they are play out and how they are implemented and how quickly they are implemented. If Trump wins, yes, this is bad news for China in terms of trade. But, and I'm afraid I'll carry on saying this, the Chinese economy is not driven by exports. It's driven by investment and consumption. And in fact, on average, taking over a 25-year period, net exports added about 10 basis points for every 1% increase in GDP. So if exports were to be hit, and simultaneously, of course, inputs were also to be hit, we may find out that the net effect on the Chinese economy was effectively zero. I know it sounds completely counterintuitive, but that's the way it is. In other words, I'm not looking at exports to see whether this is going to drive the Chinese economy, and hence, if Trump does or doesn't do what he says he's going to do, it's going to impact China, and therefore me buying or selling China. Sorry, it's a little bit convoluted, but it is a series of syllogisms. It's a series of clinks.
Andrew, before we let you go, I just would like to get your view on oil prices, energy prices, because we've got a number of factors here, not just the tension in the Middle East, but weak demand out of China and what appears to be a bipartisan position in the US that shows an appetite for drilling and exploration. So where do you see oil prices heading from here?
Up on a relatively long-term basis, up, okay, because as you say, irrespective of who wins in the case of United States, this is going to be good for fossil, and in particular for oil. But then over a longer-term policy, and if the Democrats were to win in the States, they are much more committed to climate policies, all of which are looking for a diminution in the role of oil and of fossils in general. So I'm afraid it's like saying on balance, it looks as if this is going to be bullish for oil.
All right, Andrew Farris, CEO of ECognosis Advisory, thanks as always for your insights. We have plenty more ahead. This is Bloomberg. All right, let's take a look at some stocks that are moving this Monday in the Asia Pacific. Here in Australia, we've got Aussie uranium stocks doing pretty well. We've got Deep Yellow there, up almost 18% now. This is on news from Kazakhstan, the world's largest producer of uranium. They released production guidance that fell short of market expectations. The state-owned uranium miner in Kazakhstan saying it's going to produce 25 to 26,500 tons of uranium next year. Forecast is higher than 2024, but below usual agreements, so Aussie uranium miners look well positioned to fill the gap there. Chinese housing shares doing pretty well also. China testing and certification, they're up by 10%. This is on news that quality control in housing and construction markets are going to have policies that will cushion the property sector. China's studying increased mechanisms for housing quality control and engineering, so that's enough of a catalyst for these stocks to move higher. Up next, our exclusive interview with South Korea's Vice Unification Minister on how the US elections could play out for relations with the North. This is Bloomberg. Well, welcome back. We got markets in China just heading to lunch. We take a look at the CSI 300, just off by a few points at the moment, 0.1%. We did have the MLF rate held at 2.3%, the 1 year. As expected, the PBOC also signalling that it's really de-emphasising the importance of the MLF and elevating the importance of the 7-day repo rate. So that stayed on hold. The PBOC is also initiating stress tests with financial institutions on bond investments to ensure that they can handle any volatility if that rally that we've seen suddenly reverses. Avril.
Yeah, let's also take a look at how markets in Japan are faring today. We're just about to come back from the lunch break, and today we've seen equities in Japan, a bit of an outlier, slumping as the Japanese currency climbs. And of course, that yen strength is something that was unlocked in a way last Friday after Ueda's comments in Parliament. No hints of dovishness there. And then, of course, getting further fuel thanks to Powell signaling that the time has come for rate cuts. We're seeing further declines on the Nikkei and the topics both about 1% down, declines led by the export-related names, a bit of a climb in Japanese government bonds. Let's bring in our MLive strategist, Mark Cranfield, for a chat. So we heard from Ueda last Friday. We're seeing a bit of a play out continuing today. What is your sense of the further declines we might expect on Japanese stocks given where yields are?
Yeah, obviously the yen isn't helping, but also they're looking at the yield curve as well, because the flattening effect in the yield curve is mostly being driven by the short end rising faster than the long end. And that is, when we saw the 2-year yield start to pick up a few months ago, that was what really started to hurt Japanese equities, because that was the predictor for the Bank of Japan to do more in terms of raising interest rates. So the fact that Governor Ueda now has said that he's not going to turn back, he still sees a path ahead towards more tightening. So it probably means that that yield curve flattening will extend a bit further, and that is going to be driven by short-term yields going up more quickly, which is the one that's really going to hurt the Japanese equities. There are other factors they may be able to get around it to some extent. The dividend yields are still pretty good in Japan, but certainly it's a headwind. And when you combine it with the strength of the yen as well, that's two factors which may be a little bit too much. But it doesn't mean to say that if global equities do very well, Japan might be able to diminish or certainly reduce its downside to some extent. But clearly there are some headwinds building up, and this yield curve is a relatively new one for them to have to deal with. So that's a bit of a problem.
Headwinds for global equities, including Nvidia's earnings, arguably the world's most important earnings report. What are you watching in terms of the numbers we get?
Well, here in Asia, we're very exposed because there are so many companies that are linked to it. We were just this morning looking at Taiwan, especially the TAIEX index is the top performer among the major indices in Asia, and so much of that depends on Taiwan Semiconductor and related companies and the business they do with Nvidia. So any shock to Nvidia would certainly translate into a pretty rough period for Asia, and probably Taiwan would be right at the top of that list. And if you see Taiwan Semi is up something like 60% this year, and it's done particularly well after earnings reports from Nvidia. But let's be clear, Nvidia has beaten earnings expectations many, many times, as our colleagues in the Hong Kong studio have said. It's something like 7 or 8 earnings beats in a row, which is pretty impressive for a company that's so big and is generating such enormous revenue. So expectations are very high, but we've seen them achieve even those outstanding expectations, and they may be able to do again. But if you look at the options market is pricing something like a 9% swing for Nvidia. And now for a company that's, I think it's number 3 in the S&P 500, for a 9% swing minimum in one day is really amazing. So if we do get something like that, up or down, it will definitely translate into big moves the following day across the world, including Asia.
So we could see knock-on volatility either way. But talking about exceeding expectations, what are your expectations for September? I mean, we've gone back and forth on the 25-50 debate, but what do you think the 50, if we do see it from the Fed, is going to signal for equities? Is that a sign of panic that, would become a bigger concern?
It could be, because to get to 50, it probably depends on the employment report at the end of next week. Now, that would most likely need a substantial jump in the unemployment rate. Now, we did see quite a big one at the previous meeting, it went up to 4.3%. If we went higher than that, this could be one of those occasions where equity market takes bad news as bad news. That would be a signal that not only is the Fed behind the curve, but they could be quite a long way. They may have really underestimated the weakness in the labour market. So if we do get a big jump in the unemployment report, the Fed may have to respond with a bigger cut. And this time round, the bond market will probably like it a lot more than the equity market. So far, the forecasts are that we're not going to get much of a change, and that's probably what the Fed is counting on. That's why Jerome Powell was able to speak confidently, tell the markets that you're right, we're going to do a cut in September, but probably 25 basis points. Everyone hold your horses, it's not going to be bigger than that. But this employment report is the swing factor. It's the biggest decision in the next couple of weeks.
All eyes on the labor market in the US. Mark, always great to chat with you. Thank you so much for sharing your insights with us. That's Mark Cranfield, Bloomberg MLive strategist. Paul?
All right, let's get to some top geopolitical stories we're following now. China and the Philippines are trading blame after a Chinese Coast Guard ship collided with a Philippine vessel in a disputed area of the South China Sea. Manila claims its vessel was subject to aggressive and dangerous maneuvers from 8 Chinese ships, including ramming and dousing by water cannons. The incident is the latest in a series that has fueled tensions between the two nations. Ukrainian President Volodymyr Zelensky says Kyiv's incursion into Russia is part of an effort to make Moscow accept a fair peace. Ukrainian forces claim to control more than 1,200 square kilometres of territory in its first foreign military offensive inside Russia since World War II. Russia's defence ministry says its troops continue to repel Kyiv's efforts in several areas in the Kursk region. Well, ahead of the US presidential elections, South Korea says it expects to work with whoever takes the White House to confront the nuclear threat from North Korea. We spoke with South Korea's Vice Unification Minister Kim Soo-kyung in her first interview with international media, and we asked how Seoul is preparing for a new administration in Washington.
Recently, I read the news that the US Democratic Party platform removed the goal of denuclearization of the Korean Peninsula. So people in South Korea is kind of worried what happens after the president election in the US, but we strongly believe that our alliance between the US and South Korea is stronger than ever, and regardless of the outcome of the president election, we are going to deter North Korea's threat of nuclear weapons based on the strong alliance between two countries. So we are not that worried about what happens after the US election.
Especially if you look back a few years and under the Trump presidency, we actually saw more dialogue between Washington and Pyongyang. But then at the same time, there was a little bit of concern that Seoul had just been taken out of the equation. Is that a concern that's still around here in South Korea, depending on who wins?
We have believed that we have the strong systematic alliance between two countries. So no matter who is going to be elected, I think, or our government believes strongly that those two countries will closely work together to deter North Korea's nuclear programs. So we are not much worried about it. We are going to take the lead in implementing peace on the Korean Peninsula. We are not going to be ruled out.
The global order seems to be changing now. There's a lot of movement, especially with the ongoing war in Ukraine. It's been really interesting to see the closer relationship between North Korea and Russia. What are Seoul's thoughts about that?
So as you know, recently Russian President Putin visited Pyongyang in 24 years for the first time, and they signed a new treaty and upgraded their bilateral relationship centered on military cooperation. And we are worried that, or there is a deep concern that this kind of military cooperation can happen not only in times of emergency, but also in times of peace. So we are so much worried about it. And we believe that we have to work closely together with the international community and to deter nuclear threats from North Korea, and any kind of military cooperation between those two countries that strengthens the military capacity of North Korea is a violation of UN Security Council resolutions. So we need to work closely together with the international community not to make bad things happen in between those two countries.
North Koreans have tried to escape the regime for a very long time, which is why we've seen so many defectors over the years, and yet that number seems to have sharply dropped What role does Seoul think that China is playing there?
China is the place where many defectors are going through to come to South Korea. So if China is tightening control over these North Korean people and force them to go back to North Korea, then the number of defectors drops. If China closes their eyes to these North Korean people just go through their land, then we have higher number of defectors. So China is kind of a very important factor in deciding the number of North Korean defectors coming to South Korea. And recently, like defectors from the elite group, we call it, for example, diplomats or students or training company workers who were dispatched abroad. The number of these elite group defectors is now increasing. So this means that there is a high demand for defection, but it is really hard to cross the border because North Korea is tightening control over the borderlines. So it is almost impossible to cross the China and North Korea borderlines to defect from North Korea.
That's South Korea's Vice Unification Minister Kim Soo-kyung there. Still to come, our exclusive interview with Indian AI startup Saam, sometimes called India's OpenAI. We'll hear about their offerings, which include a new AI-powered voice bot up next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India Focus. Here is a look at Indian markets just ahead of the open, a little bit under 2 minutes away. Looks like it's going to be a risk-on day in India as well. This, of course, after we got some fairly dovish remarks from Fed Chair Jay Powell at Jackson Hole. Sensex better by a third of 1% in the pre-market there. Sticking with India, locals are now getting better access to AI technology. Voice products or chatbots are a particular focus and could turn the country into a proving ground for the next phase of generative AI. Our tech reporter Annabelle Jewellers joins us right here in Sydney with more. So, Belle, what's driving this change?
Well, I think it's pretty much a story of one size doesn't fit all. I think in the timeline of where we are right now, it's nearly 2 years since ChatGPT was introduced to the public. And since then, it's really been a story of models that are built on English data. And of course, that doesn't work for everyone. And particularly in a country like India, where you've got millions of people that don't have English as a first language, they're also preferring to communicate in spoken language over text prompts as well. And so you've got that shift where you're really seeing now this focus on AI voice products instead of that traditional text-based chatbot instead. And so by making these voice bots, there's that hope that you can have more of a dynamic, a more conversational service, and that they can also respond in real time. And so if India ends up following or leading in this space, then there's that hope that other countries could follow suit. But one example is a company called Saam, and I heard you mentioning to the break there that it is often compared to India's OpenAI company rather. And last month it actually unveiled a new product that lets businesses interact with customers using voice instead of written language, and it's based on the data from 10 different local languages, and it's priced extremely competitively as well to try and capture that market share. But let's get more on that now. Joining us exclusively from Bengaluru is Vivek Raghavam. He's co-founder of Saam, an Indian startup, as I said, focusing on generative AI. But Vivek, thanks so much for joining us this morning. And I think we can get started with this new product that you've just brought to the market. Tell us more about it, and then we can get perhaps to that pricing model as well.
Thanks, Annabelle, for having me. I think, yes, Sarvam, the goal of Sarvam was to actually, bring generative AI to, the rest of the world. And, we looked at 3 or 4 important things. The first thing is that obviously that India is a very voice-driven country, and we have many, many languages. And so therefore any generative AI solution really needs to really needs to look at these two things to really get access to give access to generative AI to the rest of the world. The other thing about our solutions are, we are focused on building these solutions with small models. Obviously, the kinds of frontier models that are there in the world, I think they are, I think they're amazing. They do amazing things. But, we think that if you are looking at domain-specific things, then we actually can be both more accurate as well as more cost-effective by working on small models. And the other big thing that is there is that we believe in that, that you need to get stuff done. It's not just chatting. And I think that our models are fundamentally agentic that help people get things done.
I think what you say there about that sort of shift toward a small language model, because for so long a lot of the conversation revolved around how many parameters AI models had, but talk to us about how many parameters you're building off, and again how that plays into your pricing strategy as well.
Yeah, so I think we obviously use not just one model. We actually use multiple models orchestrated to actually give the user experience, real-time voice experience. But our models are typically in the single-digit billion models. Like, for example, one of the models that we've actually open sourced, which actually is trained on Scratch from in Indian languages, is only a 2 billion model. But we are looking at other models also. We use existing open source models, and so therefore it's anywhere from under 10 billion parameter models is what we typically use.
You're offering your voice bot at 1 rupee per minute to businesses. How is that price competitive right now?
No, I think this is I think this is a big change, and I think that we hope that compared to anything else that's there, we believe this is significantly cheaper, and also more importantly, actually solves a real business problem that people want to solve, right? I mean, I think that people want stuff that actually helps them solve their business problems at a cost-effective price, and we believe that this is really a big change in that space.
You're mentioning that you're sort of trying to solve a real-world business problem here with this AI technology. Is that what you think that you're seeing across the rest of the Indian AI landscape? Do you think that other developers and startups are handling those challenges as well?
Certainly, I think we come from a place where, in the end, AI is a means to an end, right? So we have to solve real problems that solve problems for businesses and make the lives of people better. And I think that the kinds of problems the kinds of solutions that we offer will be a harbinger of other ways in which the world will see how to really make this wonderful technology helpful and improve access to people around the world.
So if you're talking about sort of being a world leader in this area, then do you think that sets you up for better funding? Because you've raised around $40 million to date. Do you see more in the pipeline?
I think we certainly want to become one of the world leaders in looking at voice solutions at low cost, and I think India is a very good proving ground to start off from. I'm sure that we will raise money in the future, but at this time we don't have any immediate plans.
But are you on the path to profitability right now? Would you see yourself being able to be profitable in the near future?
See, I think as far as that is concerned, we believe that the way by which we've priced our products, that we can actually make a profit at that. But we're still at an early stage, and I think that we certainly believe that when we provide value to customers, we can do it at this price. We're very confident about that.
So what's the sort of timeline then? When are you expecting to be profitable, and what's been the demand so far from businesses inside India?
See, we're a fairly early stage company at this stage. So, but I think that there is a lot of interest from farm enterprises, and we see that in the next 6 to 12 months, we'll see significant traction with our products.
How would you say that Saam then is different from the likes of OpenAI, Anthropic? Do you think it's more sort of symbolic of, or a better representation of what's happening in the Indian AI landscape?
I think we're different in two ways, right? I think one of the things is, as you correctly said, we are focused on small models. We are voice first, and we want to solve the real business problems that are there in India. And I think that's the way that we see this. And we see that when you want to use generative AI millions of times or billions of times a day in cost-sensitive economies such as India, I think you'll have to take an approach like what we're doing.
All right, Vivek, thanks very much for your time there. That was Vivek Raghavan, co-founder of Saam. And of course, as we were saying there, Paul, India perhaps taking a different path to voice bots and sort of charting a different course, especially when you've got a greater focus on voice activation instead of text.
Mm-hmm. Yeah, let's take a look at how Indian stocks are trading right now. We've got most indexes modestly higher, the Sensex better by around about 1/3 of 1% at the moment. It's some of those traditional stocks that are doing quite well today. We've got Gujarat Petroleum surging up the most or Petronet up the most in 11 weeks. MedPlus, meanwhile, dropping to the lowest in 6 months. We had a couple of big block trades there. The rupee hovering around those near record lows. More to come. This is Bloomberg. All right, let's take a look at how markets are tracking this Monday afternoon, seeing a little bit of weakness in Japanese auto stocks. In fact, the Japanese index more broadly is softer, down about 1.2% on the Nikkei, thanks to a stronger yen, thanks to Jay Powell's remarks. But if we just zero in on a few of these companies, we've got Nissan downgraded to underweight from neutral at JP Morgan. Got a price target now of 330 yen, down from 560. Seeing weakness there in the company's US business, downside earnings risk over the next few years for that. Also, Yamaha Motors slipping as well, off almost 5% now. Yamaha looking to sell as many as 38 million shares in a secondary offering. Toyota is also going to sell a little bit over 18 million shares. And we've got Toyota softer by about 3.5% right now. Let's take a look at how Asian chip stocks are doing at the moment. They are looking like this ahead of those key earnings from NVIDIA. A lot of volatility being priced around NVIDIA as well. Options implied move the day after earnings 9.35%, so we might see it add or lose 300 billion in market cap depending on how things go. Let's take a look at Hong Kong property stocks as well. That index up the most in 6 weeks, with the Fed looking to cut rates soon. Jay Powell saying, well, the time is pretty much upon us, so that's propping up Hong Kong property stocks there. That's it from Bloomberg Markets Asia. Horizons Middle East and Africa up next.